Rolling. Hello and welcome. You're tuned into this fresh new edition of the Climate Clock podcast. Well, climate change is real. It's impacting everyone, and that is something that we have established as well. But you know what's happening now that countries and governments globally, they are becoming more active about it. Now they are going ahead penalizing or taxing any product which is causing more emissions, which is more polluting. In that case, there's been a new update as well. The European Union has come with a new rule or a regulation which is called Carbon Border Adjustment Mechanism, where they are talking about any imports coming into their particular region to talk about disclosures on their carbon emissions, to talk about what they are actually impacting the climate in a certain way as well. So maybe if India exports certain products to the European Union, they will have to make these disclosures. It might sound quite qualitative, but it will have a quantitative impact as well. What it would mean for the Indian economy as a whole, some of the sectors, and a lot more. Let's discuss it with an expert today. We have Rahul Prithiani, who's joining us from CRISIL. He's the senior director and also the global head consulting at the company. Rahul, thank you so much for joining us today. And you know, it is a very technical topic. We were talking about it. In simple terms, if you can tell us, what is European Union trying to do with this carbon border adjustment mechanism? What does it mean?
Thank you, Sonal. Happy to be connected. So I think under the carbon border adjustment mechanism, what European Union is trying to do is they want to ensure that there is no carbon arbitrage that companies are seeking who are accessing the European market. Essentially, the entities which are present in the European market, they are incurring a carbon tax, or there are certain emission trading norms that they have to adhere to, and there is a cost associated with it. They want to ensure any goods or services which are coming into the European Union are also subjected to similar kind of regulations or taxes or costs, so that there is no tax arbitrage for local companies to go out, or exporters who are coming in to have an advantage versus some of the local companies. The idea, again, from a European Union point of view, is to ensure that from a carbon emission point of view, they want to get the right disciplines. They have, again, committed to a 2050 kind of target for net zero. So given that background, I think this is one important regulation that they have put in place.
Okay. So, you know, when you talk about them trying to make it even with their local companies, so tell us about that. Are there already some laws for carbon taxes when they are manufacturing some product, or some of the industries which are doing some of these activities? Is it a tax which is applicable across all the industries, or is it for some goods?
So I think in the EU region, you have a trajectory of carbon, which I think some of the companies have committed to, or rather, the government has made the companies commit to a certain emission trajectory, and there are emission trading systems also in order to offset. In case you are not meeting that, then you have carbon credit related system which is there, where you can again purchase those carbon credits and kind of achieve your targeted goals. So in order to kind of encourage companies to decarbonize, I think they have put in place this system. This system is in place for 7 sectors which are highly carbon intensive. So that being, cement, steel, fertilizer, chemicals, and there are a couple of other sectors. So the focus is on hard to abate sectors, covering them and bringing them under this kind of purview. Going forward, clearly there'll be more and more segments and sectors which will come as part of the overall carbon border adjustment mechanism. As of now, there are only 7.
Okay, so let's simplify it further. What does it mean? If India is exporting, say, steel, aluminium, fertilizer, chemicals to European Union, they will have to pay more tax on it. How much more will it be? Does that mean, is it the simpler way to put it?
So, if Indian companies are exporting to the European market, they will need to first disclose the kind of emissions that they are incurring for the amount of exports that they are doing for various products. If you look at steel, it could be various steel products like HR coils, CR coils, or various other products. What is the kind of emission that they are doing? That will be something that will have to be reported. Now, that emission will have to be compared with what is the EU trajectory for emissions, and depending on, again, what are the kind of allowances available, basis that what are the kind of balance amount that is yet to be kind of offset, you will need to take a carbon credit, or a equivalent tax is something that you might have to pay at the end of 3-year mechanism. I mean, the reporting cycle has begun from October uh, this year, and from 1st of Jan 2026 you will have to start kind of reporting those numbers.
Okay, so these reporting of these numbers looks like a very compliance driven work, right? But will it actually have a quantitative impact? Will these companies see an impact on their balance sheets if they import to European Union and they come under this particular mechanism of carbon border tax?
So I think as they will start reporting from from calendar year 26, you will start seeing some sort of implementation mechanism being put in place, where companies might have to either purchase carbon credits in those markets, or they will have to show equivalence from a domestic point of view, where they've achieved those carbon targets in terms of emissions. So it will mean physical equivalence that they will have to pay, and whatever is the carbon pricing at that point of time, you will have to purchase those credits, which will mean a direct impact on balance sheet profitability, and it will start impacting you as in terms of your business and the return profile. So it's a very important for players who are exporting in these markets.
Hmm. So the last report that I read from you said it could be a 40% impact. Can you break that up for us?
So I think if you look at the entire space from an export point of view, the two critical elements from an India perspective are steel and aluminium. If you look at purely some of the other segments, those are not typically exporting products that we kind of cater to these countries. So if you look at, say, steel for instance, if I look at the emission with respect to steel, India, the number is around 2.4 tons per ton of steel produced, 4 tons of carbon per ton of steel produced. Now if you look at the same number in Europe, it's a much lower number. Now this would mean essentially almost a 20% kind of increase in potential cost that you may have to incur in those markets. If you look at aluminium, the impact is much bigger, because aluminium is I would say we export a lot more primary aluminium compared to what we do in terms of steel, and the intensity of carbon produced through aluminium is also a lot higher. So in India, for instance, your intensity of carbon produced for aluminium is about 22 to 24 tons of carbon for a ton of aluminium. Now if you compare it to EU, there the number is going to be 6 to 7. So it's
Okay.
a very large change, and this is on account of EU using largely hydel based power for generation or for production of aluminium. Given that context, there's a big cost challenge. Although from an efficiency standpoint, maybe Indian companies would be slightly better off, but even having said that, it could be a very large number that one is talking about in terms of aluminium sector. So this is one sector that one needs to really be careful about and watch going forward, and it will be very critical for companies to put in place mechanisms, look at use of renewables power, so that your emission trajectory gets reduced a lot faster.
Okay, so what basically European Union is trying to do here is that, okay, listen, there are lesser emissions in Europe, but you are exporting something which comes in with higher emissions, so let's tax you so that there is lesser emission there. That's the indirect way of calling it
Absolutely.
out, right? That they're trying to penalize you for creating something which creates higher emissions. So European Union sees lower emission when it comes to aluminium, when it comes to steel. Which are the other countries globally, would you know, which are seeing higher emissions or higher contributors to emissions when it comes to aluminium or any other metal?
So I think we are a little bit on the higher side as far as India is concerned compared to most markets, because we are a very heavily coal intensive economy. Even if you look at China, again, relatively heavy coal intensive
Hmm.
economy, but they have also moved a lot towards renewables in a much more rapid manner. So I think clearly, both India and China, which are the key markets for exports in most countries, I think they're both still quite carbon intensive. Maybe India is slightly on the higher side even compared to China.
Oh, okay. That is surprising. I thought that China would be the one which would lead the way in pollution through manufacturing as well. Do you think it is fair? What is the general consensus? Because it has received a lot of pushback, so to say. Is the government doing something about it? Is it as per the global trade laws?
So I think this is clearly something that the EU wants to push through, and it's and it's also something that some of the local companies have been kind of, wanting, because they want a level playing field versus some of the overseas players who are kind of, exporting in that particular market. So to that extent, I think, I mean, the argument from a trade perspective is not very strong. At the same time, what the Indian government has to kind of, ensure that there are no disruptions, there is fair play, and over a period of time you can put in place policies and lobby. But at the end of the day, the larger concern of decarbonization remains even for India. India has a 2070 kind of a net zero target, so we also have to move in that direction. So I think the focus from the Indian standpoint should be more towards kind of, making sure that we bring down the cost or scale up solutions which can promote decarbonization across industries on a much faster manner, provide incentives which are kind of, supporting that piece, and also nudge the corporates to move towards that, because ultimately it's good for us also at the end of the day. But yes, shorter term considerations will clearly be there, where you want to balance your growth as well as some of the environmental concerns. So I think India will have to chart a trajectory which kind of, works for us.
So the onus is on us, and what European Union is doing is generally what would the practice be going forward as well. Is this something that we are seeing with other countries? Do you think other regions would also come up with some carbon border tax where they will ask any imports to basically disclose their emissions?
So I think clearly, I mean, very difficult to say whether other countries would do it, but more so, and this is something that will be necessary for a decarbonization going forward. That's why in most markets we are seeing early stages of development of a carbon market, so that you can see and you can really track what each country is doing. Maybe not as stringent as the EU, but we surely expect that this is something which will become a more commonplace going forward if the world has to achieve its decarbonization goals.
So, there's a timeline here. You said started from October 2023. From 2026, there will be full execution of this particular mechanism. What is the free agreement or free allowance in this? What does that mean?
See, free allowance is the carbon trajectory that the local entities are following in those markets. Till 2030, for instance, there is a defined carbon trajectory for a particular sector in that market. Now, the free allowance is, as long as you are matching that, you may not need to purchase anything.
Okay.
And if you're going above that, that is when you will need to kind of, purchase carbon credits to kind of, get to that equivalence.
So, okay, so for till 3 years, you have free allowance no matter what. Is that the case?
You have to report, but post that there will be implementation, which would mean it could be a tax, it could be asking you to purchase carbon credits, or equivalent cost will be imposed on the importer.
Okay, so the penalty that you have to pay, so to say, will be via only purchase of carbon credits.
It could take various forms, so we'll have to wait and see.
Okay, so there's no clarity on that as of now.
Yeah, most likely there will be some sort of move towards that.
Okay, so when we talk about carbon credits, even those prices have risen around, I would say, 4 times in last 2.5 years as well, right? So suppose today I book my contract that I'll be selling it to the European Union some amount of steel. But by the time it gets dispatched, say 30th of November, the prices of carbon credits have also increased. So you'll have to pay the increased prices?
Yeah, I mean, if you will have to purchase then and then whatever is the market, and so that's why development of that market is very critical. In India also, we are looking to develop the carbon market itself, and the government has come out with a few regulations. How that moves will also be very important. But from a company point of view, I think it's more critical to set up your decarbonization roadmap, reduce your emissions, and to the extent of exports, at least that is something that you need to address much faster. Uh, to that extent, so having a good faster roadmap as a corporate will be very critical at the, be it Indian market or overseas market. You don't want to incur costs on account of that.
But that roadmap might not just happen recently or immediately, right? 3 years, if there is a time available for that, even then they can't just decarbonize all their operations as well. So suppose if something like Tata Steel, Hindalco, if some of them export their products right now, what is the average impact that you think they will have to incur in their PNL or in their balance sheet? Is there a number to it which the analysts have put out?
See, I don't have a clear number to that, but one thing that we see most corporates practicing is to the extent of export, they are looking at making sure that they are able to provide adequate amount of offset. It could be through purchase of renewable energy, or it could be use of scrap based steel production. So they're looking at alternatives as to how that can be addressed. So that's what the broad plan is. Quantification is something that we've not done as of now.
So, we have spoken so much about carbon credits. How does this mechanism work generally, if you want to make our viewers understand as well? And is greenflation, that is a term that you've used in the report as well, also going to be a big issue when it comes to the taxing or this particular mechanism?
So I think if one looks at the overall decarbonization piece per se, incrementally as corporates have to incur more and more capex towards decarbonizing, until the solutions scale up substantially, be it green hydrogen, be it carbon capture, be it renewables of course now
Hmm.
pricing is much more favorable. Till you see solutions becoming economic and scalable, you will need to incur cost. If there are certain mandates from various government, be it in India, EU, or
Hmm.
any other market. So in that context, you will need to incur additional capex, which would mean you will incur capex without any commensurate return,
Hmm.
because the demand supply dynamics of the end product will determine
Yeah.
what the pricing is. So to that extent, in the short term there could be certain costs, but of course that ensures more longer term sustainability for your product. So I think more or less there will be in the near term there could be a upward impact in terms of pricing for end users.
Hmm.
But over a period of time, as solutions scale, that cost should kind of come down. And this inflation that you spoke about could be there if you have higher amount of taxes, and the trajectory at which you are decarbonizing is much slower.
Hmm.
So to that extent, that can be controlled as long as your scalability of some of your solutions becomes much faster. That will ensure that the impact on the end user is the least.
Mm-hmm. Okay, so in that case, are we going to continue to see, if you would have an idea about it, increase in carbon credit prices? Is it largely driven by European prices, or does everyone have their own mechanism if we are talking about this particular tax that is levied by European Union?
Sonal, this is something which is largely open, because you have carbon trading mechanisms in various countries
Hmm.
and various jurisdictions. The alignment on all of that will be
Hmm.
very very critical,
Hmm.
and one geography accepting some other
Yeah.
geographies alignment towards that is a very critical aspect. So this is a lot of WIP that various governments need to kind of work on. So I think it's something that we have to watch out for, and it should be a very critical agenda for all the governments going forward.
So, nobody, earlier when this idea came out as well, nobody spoke about it so much, but now it's finally implemented as well. Have you had any word with anyone in the industry? What has been the outlook or the feedback? Anyone from the metal industry? Are they okay with it? And you said we have to move towards sustainable practices, but are they ready for it according to you?
So I think this is one hard to abate sector, the metals industry,
Hmm.
and I think clearly people have been seeing this on the horizon for the last 4 to 5 years.
Okay.
And some of the corporates have started planning. In fact, many of the large corporates have started planning. They've started reporting, and they've start trying to put in plan. And most of the large corporates have plans roadmap towards decarbonization, and they want to kind of make sure that it kind of balances all needs, near term, short term, as well as the longer term sustainability needs, and also with a structured plan where you don't want this to impact your returns, but at the same time does make sure you're moving towards that trajectory. So they are doing a balancing act. Most of them have set up decarbonization plans. They are looking at technical solutions and alternatives. Not in all cases they are very viable, but at the same time they are looking at least for certain smaller pilots that we've seen many of them coming up, and in some cases even larger projects being kind of looked at from a decarbonization perspective, and they're looking at it very closely. Some of the easier hanging low hanging fruits where you see cost economics being favorable, such as renewables, they are to a large extent Indian corporates have kind of embraced it in
Hmm.
a bigger manner. And wherever there are larger challenges with respect to technology, for instance in steel, availability of scrap, moving towards hydrogen, going towards carbon capture. Now these are some things which will come in future, depending on how quickly the world evolves and how quickly scalability comes and how quickly the regulations move.
Okay, so a lot of it is, as you said, WIP. So, last question before we end this conversation. What is the export split? How much is of steel or metals or fertilizers or the bigger impacted sectors go to European Union right now?
So I think if you look at the bigger impacted sectors, I think aluminium is a key segment where we are exporting quite a lot. So we are exporting, I mean, almost like close to 30% in that market. So to that extent, that is one space which will have a relatively larger impact. As far as steel is concerned, in the overall scheme of things, if you look at the production numbers, we export a very small amount. Maybe we are talking about 10 to 12%. Now within that, EU market again will be 3-4%. So it's a much smaller impact as far as that sector is concerned. But these two sectors will be critical. From a fertilizer perspective, we are not really a very large exporter. So to that extent, the impact is much lesser. Cement, again, it's a more localized market.
Yeah, exactly. We talk about the localized markets when it comes to cement as well. But Rahul, thank you so much for throwing light on this important topic, because it is going to have a big impact, but not spoken about so much, right? And it is going to impact the balance sheets, the P&L statements of a lot of these bigger companies. So we need to be really aware about that. So thank you so much for joining us today.
Thank you, Sonal. Thank you.
Okay, with that, we'll take your leave on this edition of Climate Clock Podcast. Stay tuned for more news and updates, everything that comes to climate change and sustainability.